Ladies and gentlemen, the stock market has staged an incredible bull run. And for those people who have caught the bull run, congratulations to you. But today, there might be another opportunity that I want to highlight to everybody. And today, we'll critically examine this asset and see whether is it a crash buying opportunity, or is the opportunity over, or is it a bull trap? So let's watch on till the end as I give you my analysis. So the asset I'm talking about is gold. Everything that's glittery and nice and yellowish. And the question really is it the next crash buying target that we should all jump in? Or is it something that we should never touch? So I'll attempt to give you a unbiased view. So let's watch on. So there are four questions that we need to ask ourselves. Number one, has gold prices reached a bottom? And second is what has caused it to go up recently by a little, and where are all the analysts' prediction? And basically, at the end of it, answer the question: is gold the next buying crash buying opportunity? So gold prices have reached a high of almost $5,600 in early this year, January, on a per ounce basis, and it has crashed, okay, quite a lot. In fact, close to 30%. And right now, it's just hovering around $4,100 or so, and it is a very significant pullback still. And recently, the gold prices has actually rebounded, okay, quite significantly actually. It has gone up from about $4,000 to 4,100 over dollars. In fact, in the futures market, is registering $4,200 already. So it is something that it's very interesting. So the question really is this 1 month high confirm a breakthrough? Now, I'm not going to use technical analysis, but I think we should take a look at what the analysts say, and then take a look at what are reasons behind this rise, and then we make a conclusion. So there are three catalysts behind the rebound. The first and most important thing is the same reason why it caused the crash in gold prices, which is now oil prices, which has elevated quite a lot, has now fallen. And the falling oil prices will ease inflation risk, and therefore will reduce the Federal Reserve urge to increase interest rate. And once interest rate it will not increase, may even fall, and that will set gold prices to go down. And the US dollar will eventually weaken as interest rate goes down, and that would make gold more attractive. For if you hold on to the US dollar, the value might fall, they'll switch to alternative like gold. And they are predicting that yield may possibly go down as well, and that would possibly create more opportunity because gold opportunity cost is now lower. So these are reasons why gold prices are going up right now. So let's try to recall why gold prices collapsed. That was largely because Donald Trump and Israel launched a war against the Iranian, and that caused the whole oil prices to go up. And on top of that, then comes the lockdown of the Straits of Hormuz. And as a result, oil become constrained. It went all the way up to 100 over dollars. And of course, that causes inflationary fears. And with inflationary fears, there's interest rate rise possibility, and that will drive gold prices down. The reverse is happening right now, and therefore, this peace expectation between Iran and US, at least a ceasefire, a formal ceasefire between the two, certainly gave the hope that the reverse could happen, which means gold prices may rise. Now, actually, if you have remembered, earlier this year, before the war broke out, the banks were all predicting that gold prices will hit 6,000 US dollars per ounce. And as a result, there were a lot of buying of gold across the world. Central banks were buying, ETF for golds were in high demand, and so on. And suddenly, the war broke out, and that caused the entire gold prices to collapse. Now, I think it's important we take a look at where all the current prices for gold is in terms of their prediction, where banks are talking about and analysts are talking about. Well, I pull out a handful of them, and then later we'll give a summary. JP Morgan is now predicting you'll hit somewhere between 4,003 to 4,005. Goldman Sachs 4,009 per ounce, HSBC 4,005 to 4,007, Bank of America 4,003, Citibank 4,005 to 5,000, UBS says 5,002. Now, of course, these are all within by end of this year or the including 6 months of next year, which basically means a 12-year estimate. Now, these are very interesting numbers because all these numbers are significantly higher than what the number is now. So everyone, without fail, is saying gold prices will rise. So this is not my prediction, this is their prediction. So the consensus view before the war, okay, was very high at 6,000 plus. Then 3 months ago, because of war, everybody say, I think you will land at 4,009. Today, the consensus view has gone down to 4,005. So people have become more pessimistic about gold prices. So this is now a very good realistic view. People are not so bullish, not so gung ho anymore. But even at 4,005 is still significantly higher than what the current price is. So isn't there an opportunity there? Well, it's for you to discern. So how much would gold price continue to go up? Well, it depends who you benchmark against. It could range from just a 3% increase from the current 4,100 to $4,200. Or it could go as high as 25% more to go if you take a look at where UBS is predicting. So somewhere in between, everyone is predicting you're going up. But how far you go up, I think differs from analyst to analyst and banks to banks. So why is everyone predicting that gold prices will go up? Well, largely because people have less faith in the world's economic system, especially the US dollar. So a lot of the central banks, especially the Chinese central bank, are now diversifying into gold. And not only that, governments are also putting their money into gold as well. And there's also worry that there's a lot of sovereign debt by the US government, and that could erode the faith they have in fiat currency, which is actual dollars and cents. And if you have gold, it's a great diversifier. And I think that's a good point to think of. So, for you to believe that the rally will continue, a few things must happen. Number one, the inflationary pressure should not exist, right? So, therefore, all the inflationary pressure will continue to ease off, and and as a result, there'll be no interest rate or yield, treasury yields rise pressure. And with that happening, then gold basically will hold to a good level and may even go up. So I think we should read very clearly. Some of the reports are coming out. Employment data should be weak, inflation data should be weak, and so on. So I think these are some things that must happen for gold prices to go up. So what could cause the gold prices to collapse again? Inflation, inflation, inflation. So if there is a inflation shock again, for example, the war were to start again, then the Federal Reserve have no choice but being forced to increase interest rate, and that would be terrible for gold. Now, other things would be strong employment data and rising yield prices and so on. So if all this could happen, then gold prices could go below $4,000, and that would be terrible for everybody. Can it happen? Yes, chances low, but hard to say because the war between US and Iran is now flip-flopping from peace to war and war to peace. So in short, we have three scenarios. Number one is a bear case, which the war continues, breakout, things turn bad, gold prices will continue. Gold prices will fall because oil prices gone up. Second case is a base case where right now where everybody's predicting the gold prices will go up, but not aggressively. Okay. And of course, there's a bull case. If suddenly there's a significant fall in inflation, then prices of gold may rise significantly. And that aligns with some of the analyst forecasts as well. So is gold the next crash buying opportunity? There's evidence that support that if you hold gold long enough, generally it goes up over time. Okay, so gold prices have gone up over a few thousand years. the history of gold prices going up is even longer than S&P 500, which is only 100 years. But gold has been around since thousands of years, and across time it always go up. But are there big drawdowns? Yes. In fact, drawdown of 40, 50% is possible historically. But no question really is there a possibility of you getting some upside by holding it long term? I think that could be a strong possibility. Is it possible after you buy, go down some more? Yes, it's possible, but that's just life. So I like to buy asset when they're on the cheap. So you guys know me, I'm a crash buyer, and I've successfully done it 8 times already. So I've done it in the stock market a lot. Now, to be frank, this probably my first time touching on gold. I haven't decided, okay, officially whether buy or not, but I'll just say this: this looks like a very tempting asset to go for. But I think everybody should go with your eyes open that you may have to hold it for a longer period, much longer period, maybe in years, and also prepare for volatility in between because of the geopolitical situation is very unstable. Okay, so with this, I'll leave it to you to comment in the comment section to let me know what you think about gold as a buying opportunity for the next crash buying opportunity. Okay, so it is thank you, and I'll see you tonight in the live stream.